Hello, in this video I'm going to be going through the computer marked parts of the AAT maths exam and the management accounting techniques. I will do the spreadsheet parts in a separate video. So here we have the beginning of the first sample assessment. You have 2.5 hours, 6 tasks. You should attempt to complete every task. We've got 120 marks altogether. Nothing particularly exciting in the rest of this. You'll need to double click to enter values into a gap fill or cell within a table. And when completing tasks 5 and 6 in Excel, you don't use a password, but we'll come to that when we get to the other video. Right, so task number 1 about costing techniques, 24 marks. Identify which 2 of the following statements describe the purposes of costing. So looking really at the distinction between management accounting and financial accounting here. So as with all multiple choice questions, don't just leap to the one you think it is and move on. Make sure that you've considered every answer and select your best 2. So costing, producing financial statements for shareholders. Absolutely not. That's financial accounting. Financial planning for the future of a business. So yes, that is what costing is about. But see, they've tried to trick us by putting the word financial in there. But planning for the future of the business would be a purpose of costing. Controlling the amount of expenditure incurred by a business. Again, that is one of the purposes. It's planning, controlling, monitoring. These are all purposes of costing. But let's just check it's not the last one. Performing reconciliations to confirm the accuracy and existence of assets. I know that's something that we do with our non-current asset register in financial accounting. Identify whether the following statements about budgeting are true or false. A budget is a financial plan which is prepared in advance. Yeah. A budget always covers 12 months. No, can cover any period of time that you wish. A hotel offers a range of products and services to guests. Identify the most appropriate costing method for each of the following products and services offered by the hotel. Right, so a bespoke wedding service. Bespoke means it's a one-off, so that would be costed as a job costing. Standard cream teas. So the word standard means that they're repeating this thing over and over again. So they're going to work out how much it costs per unit, which would be per cream tea. So that one would be unit costing. Hiring out rooms. Well, there's clearly no product involved there, so it must be service costing. Debrax Limited is a clothing manufacturer specialising in designer jackets. In current production is a batch of 800 daisy jackets. The cost of the batch has been estimated as follows. So I'm not going to read all of this out, but we can get a feel. We've got material costs for the designer cloth and the lining. We've got direct labour, cutters and sewers paid on different rates. A variable production overhead of £8 per direct labour hour. We're going to have to know how many hours are being worked, and fixed production overheads of £18,000 per batch. And just to remind ourselves, 800 jackets in a batch. So we have to complete the cost card. Now it does say here the information can also be viewed in the references section. So if I were to click on the references here, and then this task, it will give me that information to refer to. And as I move that over, notice that it's you know, I'm not losing any of the words, it's just squeezing it slightly. So that's quite handy actually. And then I'm being asked here to complete the cost card. So designer cloth. So I need 1,200 meters at £6.50. So just multiply those together, which gives me a figure of 7,800. The lining, 1,000 meters at £2.70. So just multiply those together. And it's working out the total direct material for me. Direct labour, cutters are paid £10 per hour with an additional 50% for any overtime. And incidentally, overtime is classed as a direct cost, which means it's directly linked to these jackets that we're making. To produce the batch will require 600 basic hours and 100 overtime hours. So I'm going to calculate 600 times 10 and then add to that 100 hours at £15 per hour, because obviously adding on 50% to 10 gives us £15 per hour. So 600 times 10 plus 100 times 15 gives me £7,500. Right, then the sewers. The sewers are outsourced and paid £23 per jacket. Well, there are 800 jackets being made, so 23 times 800 gives me 18,400. And again, the system's working out the total direct labour. The variable production overhead, £8 per direct labour hour. Right, so how many hours are being worked? Well, there's 700 hours altogether. So if I do 700 hours times £8, that will give me 5,600, which is my variable production overhead. They've already told me that the fixed production overhead is 18,000. I'm just going to close that reference material by clicking on that reference button again. And now if I add up my total estimated absorption cost, remembering that absorption cost includes all of my production overheads, but be careful here, you've already got some subtotals, so we're going to do 10,500 plus the 25,900 and then add on the 5,600 and the 18,000, which is going to give me a total of £60,000. Identify the correct journal entries for transferring the cost of direct labour for cutters to production. Now, it's not asking for any figures here. It's just got a drop-down menu. So I know that basic wages are always a direct cost. It's going to be a debit because it's an expense. It's a cost of production. And then overtime, if you remember, it told us that overtime is classed as a direct cost. So that must be a debit direct cost also. So then the total, which will be the sum of those two figures, must be a credit. And the question is, where am I going to credit it? Well, the only one that's at all meaningful here is the wages control, which makes sense, of course, because we know from level 2 that we go debit wages expense, credit wages control, and in effect, that's what we're doing here. Calculate the estimated total prime cost per batch. Okay, so prime cost, I know is just my direct cost. So I'm going to add together my total direct material, 10,500, and my total direct labour, 25,900. And that is going to give me a prime cost of 36,400. The estimated marginal cost, so I know that marginal just adds on the variable production overhead. So let's just add on 5,600. to what we had for the prime. So that gives me 42,000. And then, of course, we already had the absorption cost up here, the 60,000. Calculate the total. Oh, sorry, I missed a bit. Deborah's Limited will sell the daisy jackets for £250 each. Calculate the total revenue they will receive. Well, if they're going to sell 800 jackets, 250 times 800 is 200,000. And then the estimated profit for each daisy jacket, well, my revenue is 200,000 and we think that the cost is 60,000. That means my total profit will be 200,000 minus 60,000, which is 140,000. But reading the question carefully, it's for each jacket. So I need to divide the 140,000 by the 800 jackets in the batch, which gives me £175 per jacket. Click the answer and we're on to task 2, another 24-mark question. You can see I've only used 10 minutes of time so far, so well on target. I think it's fair to say you're going to need relatively longer for the spreadsheets for the most part. So, you know, the quicker you can get these bits done, you know, within reason, obviously you want to take your time and make sure you've checked things, but the more time you can allow yourself for the spreadsheets, the better. So this task is about attributing costs. Identify whether the following statements about activity-based costing are true or false. So activity-based costing, I know, is the one that's very similar to absorption costing. It's basically trying to share out the production overheads as fairly as possible, rather than just using a broad brush, you know, per labour hour or per machine hour. So let's see what we've got. Cost drivers are used to determine the causes of costs. Yes, cost drivers and cost pools are key terminology with activity-based costing, and that's absolutely true. Overheads are charged to production on the basis of direct labour hours or machine hours. No, that is not true, because that is describing absorption costing, not activity-based costing. Complete the following statement. Under-absorbed overheads are debited or credited. I'm guessing this is going to be to the profit or loss. Yeah. So under-absorbed overheads, if we haven't got enough expense in our system, we need more expense, so therefore we would be debiting. Stable Glazing Limited is a manufacturer of windows and doors. It has 2 cost centres, windows and doors, and 1 service centre, administration. Budgeted overheads for the year were. So these are a variety of budgeted overheads. Following information also available. So here are my kind of possible basis of apportionment. Well, floor area, carrying amount, use of receptionist time between the 3 departments. And I've also been given budgeted labour and budgeted machine hours. So that's not sort of used for the allocating and apportioning, but it might be relevant later on. Also told that the administration department's overheads are reapportioned 60% windows, 40% doors. So remember that our aim with these type of situations is to try and get all of the overheads into the production or the cost centres, windows and doors. Okay, so again, we can click on that reference material and have that alongside. The only trouble is every time you click off it, it goes back to the top. So you may or may not find that helpful. Personally, given the size of this question, I'm going to opt not to use that this time, and I'm just going to go up and down as required. Right, so we're filling in, oh, I missed a bit. No, we've done that. Right, okay. So allocate and apportion the overheads to the 3 departments and reapportion the administration department overheads to windows and doors to complete the table below. Enter your answers to the nearest whole pound and use minus signs to indicate any negative figures. Okay. Excuse me. Right, so here we go. Supervisor's salaries have been allocated. They've filled that in for us. Receptionist salary, they've told us to do it on receptionist's time. So if we look up here, we can see that that's split 75%, 25% between windows and doors. And the receptionist salary figure that we're sharing out on that basis is £18,000. So we're going to do 75% of £18,000 is going to go into the windows department, and 25% of £18,000 is going to go into the doors. Notice when we do that, it fills in the total for us. Administration salary. So here they've done the numbers and we've got to type in what the basis is going to be. So admin salaries have all gone to admin. So that's been allocated. Rent and rates, they've told us to do it on floor area. So we come up here, we get our £65,000 rent and rates figure. And we are using the floor area information to apportion that amount. So the first thing we have to do here is work out what the total square meters are. So I'm going to add 240, 150 and 110, which is going to give me a total of 500 square meters. I'm then going to calculate how much goes to the windows department. So I'm going to do 240, divide by the 500, which is the total, and then multiply it by the rent and rates figure, the £65,000 that I'm trying to share out. That gives me an answer for the windows department of 31,200. I'm then going to repeat that process for the other 2 departments. So 150 divided by 500 times 65,000 gives me 19,500 for the doors. And then finally, the administration will be 110 divided by 500 times the £65,000, which gives me 14,300. And again, it types in that total there so you can check that your 3 numbers add up to the number that you were trying to dish out. Equipment depreciation, they've done for us, so we can double click here. Carrying amount of equipment is the most likely there. If you wanted to, you could double check. So we've got 15,000 to dish out. So if we were to be doing this ourselves, let's just check one. So we would add up these 3 figures. We would do 18,000 divide by that total and then multiply it by the 15,000 that we're trying to dish out. So you could double check that these figures actually work out using the basis that you've selected. We then come to reapportion the administration. So administration here, we've got 73,050. And we've been told that that's going to be reapportioned 60% to windows and 40% to doors. So we just simply work out 60% of 73050. And remember, it told me to use minus signs for any negative. So I'm going to put that in with a minus sign to bring that down to 0. 60% of that figure is 43,830, and 40% is 29,220. Okay, and we can see that that total stays the same because we've just reapportioned from admin into the two cost centres. The actual results for stable glazing for the year were, so we've got the actual overheads, the actual labour hours, the actual machine hours. Calculate the overhead absorption rate using the most appropriate basis to 2 decimal places. Right, you might be wondering, well, how do I know what the most appropriate basis is? I know an overhead absorption rate is the budgeted overhead divided by either the budgeted labour hours or the budgeted machine hours. So we're ignoring this data for now because this is all actual. So we're looking for budgeted information. So we need to go back up here. So they've given us budgeted labour hours and budgeted machine hours in that table. So the way you decide which one is most appropriate is if you look at the windows, there's more labour hours than machine hours. So you select budgeted labour hours as your basis, right? That's what we're going to use to work out our overhead absorption rate. For the doors department, on the other hand, there's slightly more machine hours than labour hours. So therefore, this is more heavily automated, whereas Windows was more labour intensive, if you want to use the correct terminology. So for the doors, we're going to use machine hours to divide by. So what's our calculation going to be? Well, let's do Windows first of all. So I'm looking for the budgeted overhead. So the budgeted overhead for the Windows department is going to come from that. Oh, so it's highlighted the whole row, but was trying to just draw your attention to this 129630. So we need to do that 129630, which is our budgeted overhead, divided by our budgeted labour hours for Windows. So 129630 divided by 8,700 gives us £14.90 as the overhead absorption rate. And then repeat for doors. So we've got 92,310 as the budgeted overhead, which we are going to divide this time by the budgeted machine hours, 5430, which gives us a figure of £17 exactly. Calculate the overhead absorbed for the windows and doors department. So to work out what's been absorbed, I need to take my overhead absorption rate, so £14.90 for Windows, and multiply it. So remember, Windows was done on the labour basis, wasn't it? So I need to multiply £14.90 by the 8620, which is the actual labour hours for the Windows. So £14.90 times 8620 gives me 128438 has been absorbed. Doors, same procedure, £17. This time times it by the actual machine hours. So that gives us a figure of 97,852. Calculate the amount of under or over absorbed overheads for Windows and Doors department. Enter your answers to the nearest whole pound. Right, so this should be reasonably straightforward now. So we're comparing for Windows. This is what was absorbed, 128438. We're comparing that with the actual Windows overhead of 129325. So we can clearly see that the absorbed figure is lower, which must mean that we have under absorbed. And we just find the difference between those two numbers, which is 887 as the figure. For the doors, we've absorbed 97,852. Comparing that to 96,780. So this time the absorbed figure is bigger. So we therefore have over absorbed. And then you just find the difference between the two numbers, which is 1072. So on to task 3. This one is about short-term decision making. Just checking on the time, I'm 25 minutes in, I've done 48 marks out of 120, so I'm well on schedule. This task is about short-term decision making. Contribution per unit. Right, so contribution, I know, is my selling price minus my variable cost. So contribution per unit, that's going to stay the same at all levels of output because it's truly variable. The selling price, every time you sell one more, you know, it's the same amount that you're selling that item for. Every time you make one more, you have the same variable cost for each extra item. So contribution per unit is the same at all levels of output. As levels of output increase, so as we make more, the amount of revenue per unit will, we just talked about that as part of contribution, so stay the same. Total cost per unit. So let's think what total cost is made up of. Total cost is your variable plus your fixed costs. So although the variable cost is staying the same per unit, the fixed cost per unit actually decreases as we make more. Because if you think about it, you know, you're spreading the same total cost between a greater number of units. Often use the example, you know, if you were renting a room for a party between some friends and you're all chipping in, the more of you that were there, then the cheaper it would be per person. It's the same concept. So total cost, therefore, is actually going to get a bit cheaper as you make more because of this fixed cost component. So if the total cost is going down, that must mean that the profit is going up. Identify whether the following statements about the behaviour of costs are true or false. The amount of fixed cost per unit decreases as volume of output increases. Yes, that's exactly what I was just trying to explain. A stepped cost is fixed for a determined level of output. A determined level of output means between sort of 0 and 1,000, for example. So between 0 and 1,000, you might be renting a warehouse to store your finished goods. And then from 1,000 to 2,000 units, you would need another one. So your cost would step up. So yes, that is true. Blenbell Electronics Limited manufactures a variety of electrical components. The following information is available about the cost of product A28. And we have to calculate the variable cost per unit. Okay, so this is a classic spot that you need to use the high-low method. So with the high-low method, we need to write a little table would be my advice. So I can't write on here, I don't think, but you would have high and low, and you would have your units and your cost. Because basically what we've got to work out is how much have the units changed by. So 200 extra units has cost an extra £1,560. So any change in the cost must be to do with the variable cost. So if an extra 200 units have cost an extra £1,560, the difference between those two figures there, then one extra unit must have cost £7.80 more. I just did that by dividing the 1560 by the 200. So £7.80 will be my variable cost per unit. The next part of the question wants us to calculate the total cost of producing 1,500 units. So we know it's going to be something higher than 26,000. Always good to use a sort of reasonableness test. And we need to sort of carry on with our high-low method. So if we know that the variable cost per unit is £7.80, if I then feed that into one of these sets of data, so I'm going to use the top one, the 1200. So if I do £7.80 times 1200, that gives me 9,360. So I know that that must be my total variable cost. Yeah, £7.80 times 1200. But the total cost is 24,860. So if I find the difference between my total cost and what I just calculated as my variable cost, which was 9,360, that tells me that my fixed cost must be 15,500. So now I'm armed. I know that my fixed cost is 15,500. So I'm going to have that when I make my 1,500 units. And then in addition to that, I'm going to have 1,500 units times by the £7.80, the variable cost. Okay, so altogether that variable cost comes to 11,700. Add it on to the 15,500. So my answer here is 27,200. The management accountant at Blemble Electronics Limited has collated data about product Q102. It's asking me to work out the margin of safety, giving me some data. Right, so I'm thinking, right, margin of safety, it wants the answer in units. So margin of safety is the difference between my budgeted number of units, excuse me, and my break-even number of units. So my starting point here is to work out my break-even units. To work out break-even units, I take the fixed cost, £880,000, and I divide that by my contribution per unit. Contribution per unit is the selling price subtract the variable costs. So that's going to be £550. So I need to do 880,000 divided by 550, which gives me a break-even number of units of 1,600. So 1,600 units to break even, 2,400 budgeted. So my margin of safety is simply the difference between those two figures, which is 800 units. The number of Q102 units that must be sold to produce a profit of 220,000 is, right, so to make a target profit, I don't want to just cover my fixed costs. I now want to cover this target profit as well. So I'm going to have to add together 880 plus 220, which is 1,100,000, and then divide that by my contribution per unit, which remember was the 550. So when I do that, I get an answer of 2,000 units. The management accountant of Blemble Electronics Limited is concerned about product S83. The budgeted data for the manufacture and sale of 1,200 units shows a forecast loss. And we can see that here in this table. Forecast loss of 2,400. At 1,800 units, we've got some information about what happens to the revenue per unit and so on, the various costs. And we're being asked to complete the table to show the forecast profit or loss at 1,500 units and at 1,800 units, entering answers to the nearest whole pound, and any loss figure should be shown as a negative. Right, so all of these changes up here only apply at 1,800 units. So at 1,500 units, I'm going to do pretty much a normal flexing of the budget. So if I know that the revenue for 1,200 units is £168,000, if I do 168,000 divide by 1,200, I effectively calculate what the revenue per unit is. And then if I multiply that by my 1,500 units, then I get 210,000. Incidentally, I've made a note here that when I worked out the revenue per unit, it was 168,000 divided by 1,200. That came to £140 per unit. We're going to need that in a minute, so it's worth noting that down as we go. For the variable material cost, we repeat the process. So 44,400 divided by 1,200. Make a note that that comes to £37 per unit. And then we're multiplying it by 1,500 units to get the data at this level of output. Repeat for variable labour costs. That works out at £20 each, giving a total of 30,000. Right, then to work out the contribution, we could just flex that in the same way because everything that makes up contribution is variable, or you could say 210,000 minus each of these costs gives us 124,500. Or you could check it both ways, make sure it agrees. Fixed cost we know doesn't change, so just put in our 102,000. And then we can calculate our profit by doing 124,500, subtract 102,000, which gives me 22,500. Now moving on to the 1,800 part of the question. So remember we wrote down that the revenue per unit on the basis of the original data was £140. So if the revenue per unit is going to decrease by 10%, we need to work out what the new selling price is. So I would do that by multiplying 140 by 0.9, effectively finding 90% of 140. And then timesing that new revenue per unit amount by the 1,800 to give us 226,800. Variable material costs are going to decrease by £7 per unit for all units. So I noted before that the cost per unit was £37. So clearly it's now dropping down to 30. 30 times 1,800 is 54,000. We're starting to get some economies of scale, basically. We've had to drop the price because we want to sell more. That's basic economics. And then we've got some cost savings. Variable labour costs will decrease by 5%. So once again, I noted that the variable labour cost was £20 per unit. So if I knock 5% off of that, which I've done by multiplying 20 by 0.95, effectively finding 95% of the original figure, and then multiplying that by the 1,800 units, I get 34,200. Contribution. So we can't just flex it this time. We've got to do revenue minus the variable components because obviously these figures are not flexed on the original figures. We've had this extra, these amendments to deal with. So now I can do revenue minus my two lots of cost gives me a contribution of 138,600. Fixed costs are actually going to go up by £10,000. So 112,000, maybe because we're operating at higher capacity, we've had to get a new supervisor or we've had to get a new storeroom or something like that. So 138,600 subtract 112,000 gives me £26,600. Okay, moving on to the final question before we hit the spreadsheets. Task 4, this is only 16 marks, about the principles of budgeting and cash management. Complete the following statement about budgets. A budget which remains unchanged for a specified period of time is called. Right, is it a rolling budget? A rolling budget is one where you start with your year, so you might have January 2023 through to December 2023. And then as sort of January happens, you roll your budget forward. So it then becomes February 2023 to January 2024. So you're just kind of moving it forward as time moves on. So it's not that. An operational budget. So that is about an operational budget is simply the term for like your projected profit and loss account. So how much materials, how much labour, how much overhead, etc., etc. It can be for a specified period of time, or it can be rolling. So that one is not the greatest answer. So I don't think it's that one. A fixed budget. Well, name's in the question, isn't it? Fixed budget. If it's fixed, it doesn't change. Remains unchanged for a specified period of time. Whereas a flexed budget, you are going to adjust your original budget depending on what you actually produced, like we just saw in that last question. So I'm happy then that a fixed budget is the correct answer. Identify whether the following statements about costs is true or false. Period costs are identified as controllable costs when comparing differences between actual and budgeted figures. Right, so period costs are like your fixed overheads, which happen at a particular time and are dealt with in the accounts at a particular time. So there's not much maneuverability with those. So I'm going to say that this is false. Identified as controllers because they're not controllable. They're there. They're going to have to happen at that point in time. Not terribly happy with that question, but that would be my rationale. Mary Dairy Limited is a manufacturer of dairy products. During the budgetary planning process, a number of changes have been identified. Which two of the changes below would require the budgets to be changed? Okay, the introduction of an environmental charge on the level of waste produced. So this is during the budgetary planning process. So if you're doing your budget and you didn't think there was an environmental charge and now suddenly you are aware that there is, then you're not going to be able to avoid that. You're going to have to include it in your budget. So I would change that in the budget for sure. An increase in the living wage. Right, if it just said that, an increase in the living wage, then we may well have to update our budget. But on this one, it says all staff are paid in excess of this rate. So if we're paying more than the living wage anyway, therefore it becomes irrelevant. We're not going to change our budget. So it's not going to be that one. The closure of a major milk supplier. Oh dear, so that could cause a difference to our purchasing price, which might have to alter our budget. But similar alternatives can be sourced elsewhere, which makes me think, well, we're just going from one supplier to another. It's not actually going to change the amount that we're going to be paying. So no. An unexpected increase in the rate of inflation. That's very topical this year. We're running at about 10-11% inflation at the moment. So yes, if your budget had thought, well, there's going to be 2% inflation, which is the national target, and now in fact it's nearer 10%, then you are going to have to update your budget. You've got to face reality. So those two would be my answer. The accounting software of Company X has been used to predict the cash flow at the end of each of the following 6 months. Identify the point at which Company X will go into its overdraft. Right, so the red line here is the overdraft limit. And this is our cash flow. Our overdraft limit we can see here is £10,000. We can go to £10,000 in the red, as it's called. Before we, so here we're going over our overdraft limit. Look, we've gone below £10,000. But this question's asking where's the point that they will go into overdraft? Well, you go into overdraft as soon as you haven't got money in the bank. So clicking there gives me an arrow pointing where I've hit the 0 mark. Just seeing how this works, if you can move it. So that's fine. Right, identify the point at which Company X will exceed its overdraft limit and need to raise further capital. So the point at which it goes over its overdraft limit is going to be here. That's where it dips below. Identify one way a business can improve its cash flow in the short term. So if it extends the credit terms offered to customers are going to take longer to pay, so we'll have even less cash. So it can't be that. Reduce the credit terms offered to customers. So yes, you would be collecting the money in 30 days instead of 60 days. So that would help your cash flow. So I think it's that one, but let's go on and make sure it's not the others. Offer credit to existing customers who currently pay by cash. Well, no, because if you're getting cash, you're getting it straight away. Offering them credit, it's going to make it worse. Increase the credit limit of existing customers. Again, that's going to make it worse, if anything, because if they take advantage of that credit limit, they're going to be effectively borrowing more from you. So no, because I'm happy with my answer. Identify which one of the following will have a negative impact on the cash flow of a business in the short term. A negative impact on the cash flow in the short term. So if I delay all supplier payments, that would have a positive impact on cash flow because I'd still have the money. No, it's not that one. Paying all suppliers as soon as invoices are received, regardless of the agreed terms. So even if a supplier says you don't have to pay for a month, we're just paying straight away. Well, that's not good for cash flow because we're spending out money prematurely. Make sure it's not the last one. Negotiating extended credit terms with suppliers. Well, that would have a positive effect. So it's not that one. Penny Troubles Limited is a manufacturer of toys. The owners of the business are reviewing the working capital cycle of the business for the year ended 30th of November X5. Extracts from the financial statements contain the following information. So we have to work out the trade receivables collection period, the trade payables payment period, the inventory holding period, and the working capital cycle. Right, so if you know your formulas, this is easy. Trade receivables collection, so you do trade receivables, divide by revenue, multiply by 365. So that should give you a figure of 48 days. Notice it says enter answers to the nearest whole day as positive figures. Trade payable payment period is trade payables divide by cost of sales times by 365. The way I remember these, by the way, is whichever one it is, you start with that number. So trade receivables has got trade receivables on the top. Trade payables has got trade payables on the top. I then think for the trade receivables collection, I think to myself, well, it's to do with customers, which is to do with sales. So therefore I must divide by revenue. Whereas trade payables is to do with suppliers and purchasing, my costs. So therefore I must divide by cost of sales. So if you're having trouble remembering the formulas, that might help you. So that one comes to 69 days. Inventory holding period, same idea. So start with inventory because it's the inventory holding period. Inventory is about the buying in of stock. So divide by the cost of sales and then times by 365, which gives me 40. To work out the working capital cycle, we need to add together the asset-based number of days. So receivables and inventory are both to do with asset. So I would start by adding those two together, 88, and then you subtract the liability-based item, the 69. So 48 plus 40 minus 69 gives you 19 as the answer. When I press answer there, it automatically takes me on to the spreadsheet part. I'm going to do that in a separate video.